What's going on, guys? What we're going to do is we're going to take a look at two stocks today, POLA and CFG. What we're going to do is we're going to go over the trades that we made on these two stocks. They're both winners, but the reason we're picking them is because we feel these are some of the most unique plays that we tend to find success with. So we want to bring them to your guys' attention. So the first one we're going to do is POLA. The cool thing about this is going to give you guys really good insight onto why some of your trades work and some of your trades don't when you find yourself trading what appears to be a bullish pennant. Ever been in that situation where you're like, oh, it's going to go, and then it doesn't, and then you end up missing the one that does? Yeah, we've all been there. So hopefully this video can clear some of that up for you. The first thing I want to do is just show you guys the trade. So let's put our trade on here. And we'll pretty much just kind of cover the trade first, and then we'll go into the reasons why. So ended up netting $700. Okay, so the first entry, let me zoom in a little more. Okay, so our first entry was actually right here on these red candles, or I think it was a red candle here. Entered 2,500 shares there on that red candle. And then as the price came back down more into this dip, I bought 1,500 shares on the bottom of that dip, right next to the volume weighted average price, that dotted line. And then as the price moves back up, you can see I sold 2,500 shares at 244. I sold another 1,000 shares at 243. Sold 300 shares up here at 251. Sold another 100 shares at 265, and my last 100 shares at 261. Now, of course, you see the price ended up going a little bit higher later, but honestly, it only really went up by about another 40 cents or so. So big jump, but overall, pretty much caught most of the move there. But still some more great trading opportunities later in the day for some scalps and a nice long. Okay, so all in all, got 2,500 shares at 231 and then 1,500 shares at 219. So probably an average price of about 225 or so, 227. Sold most of my shares at about a 20, maybe 30 cent gain, you could argue, or so probably about a 15, 20 cent gain, and then the rest on the top there. So all in all, a great move, okay? So let's talk about why this trade worked, why we entered where we did, the thought process behind it all. So for one, POLA stock is gapping up on the day. So we kind of noticed it because it was an up gapper, okay? Before we get into too much more, what I want to do is bring up the website FinViz. If you guys haven't already seen my recent video called like Best Supernova Penny Stock Scanner, you should go check that out. It's a good one. POLA. So when we go on FinViz, and I'm just using FinViz because it's a good, easy, free tool everyone can use. When we go here, you're going to see that the float was 3.8 million. Shares outstanding were 10 million. So just given these two characteristics right here that I put in yellow, just given those two characteristics, I knew that POLA was a stock that has some decent potential to see volatility. So that being said, now that we know the stock can see some volatility, we kind of followed it, right? Hit the scanner, was starting to pop up, so we took a look at it, okay? So from pre-market to market open, we have, again, a bullish pennant forming. So pretty much we're just going to go from this low down here up. So this is the leg up, okay? And then we really just kind of trade to the side. There was even a quick snap down on it early in the morning here. And then we end up, of course, kind of breaking out of that flag and then running up all the way to these highs. For those of you that follow our channel, you know we basically trade on a trend perspective, high-low fashion. So for us, down here, we consider the buy zone. And up here, we consider the sell zone. We had a flag pattern. So the market gaps up, and we have POLA creating a flag pattern that has not yet fully played out. And it's starting to finish, it's starting to kind of break out in the buy section. Many times you guys might find that these pennants fail you, and that's probably because the markets have already run all the way up into the selling location when they start the pennant. So by the time market opens or, early morning, you're already had the move, and now you're kind of in the sell cycle and the pennant falls out like that, and then maybe you see a bounce and it does something like that. See, the difference between that one is, right, this is a cycle move. So let me shrink this down. Okay. So this whole thing, you can kind of consider as a cycle. And so we go from the low to the high, we have cycled. We've pulled all the way back down the yellow, we have cycled. Pushed all the way back up to the red, or sorry, the yellow, we have cycled. Moved all the way back down to the yellow, we have cycled. So yellow to yellow, yellow to yellow to yellow to yellow. This is getting ready to bounce. And you can see it's already starting to bounce a bit. Okay. So the markets move on a cycling fashion. So you may have been taught that patterns work and this works there, and it's true, they do work as long as your patterns are setting up in the right fashion within the overall trending cycle, right? I don't care how bullish something looks. If it's meant to sell down, it's going to sell down, right? And I don't care how bearish something looks. If it's meant to be bought up, someone's going to buy it up, and it can easily reverse that direction, okay? So long story short, you can think about it like this. We had a bull flag occur in the lower cycle, in the buy cycle. As we peaked up and started to cross over the white line, which is our midway point, we caused the squeeze and the breakout. Okay, so we're just really trending up. We hit our midway trend and then we break up. So let me zoom in and we'll run through this fully, and then we'll go to our next trade. So we have bullish pennant that faked everyone out there. All right, so we have this bullish pennant occur in the buy cycle near our support, yellow line. We press up to trend. I take a long there. Remember, I bought long here on this top, knowing it was probably a top, but I wanted to get long just in case this did not pull back and it just went right away. At least I get some of it. And I anticipated a pullback. That's why I added into this dip down here. And then as we cross through the trend, we get into a spike move, and you will see most of my sells take place around the dotted line and the yellow line because those are resistance. So as we break the market out, our price target is here. Anything above the yellow, we see it as a blessing. So the logical trade is really kind of from like here to here. Anything more would be surprising and potentially just lucky. So when we get in the habit of trading measured moves in the market, you'll find a bunch of consistency because you'll no longer guess, well, can it go up all the way to here? Or it's like, well, no, we just traded a very logical market to respectable levels, and we're going to take off there. And we teach this whole trading strategy and everything we do. If you want to join us, I mean, we've already made YouTube videos on it, so you can just search around on our YouTube channel. You'll find videos regarding this. Probably pick it up yourself, but if you want to pick this up, learn it very quickly and kind of how we do it and manage through the market each day, there's links in the description of this video. You can take you to our website. Nonetheless, anyways, that was a trade on POLA. So if we put these back on, ding, ding, you're going to see, kind of buying in the low phase. We cross trend and we sell at the dotted line and into the yellow line. And we take our trade and we don't even mess with it anymore. We're happy. We're good. Right. And you can see we're still bouncing off that yellow level. That was support. Okay. Now we're going to go over to our next trade. Now this is the same thing. We're going to go over it, talk about the stock, and then we are going to cover the trade. Okay. So again, think about it like this. This is a high market, right? That is high. And down here is low. And it's kind of the same way even in this one. This is kind of high. I label this with 1H and this with 2H. Right, and this with 2 W's, and this with 1 W down here. So you can kind of say that, by market open, after CFG had ran all the way up on the day super fast, it already went into a directly overbought scenario. And the move was straight up. So normally when a move's straight up, there's a good chance we're even going to retrace, right? The move was pretty irrational and impulsive. It just ran straight up, okay? Now I want to take a look at the daily chart too. All right, so now if we look at the daily chart, this is a scenario where the market has been coming off a down move. So think about it. Market's coming off a down move, so we go low, therefore we should buy, all right? So on the bigger time frame, we're coming into kind of a little bit of a dip buy potentially, okay? So we're on a green day bounce. If you're on a green day bounce coming from the low, right? Remember, think we came from a move up. Now we're hitting some support and we're bouncing. So if on a big time frame, you're coming from a high and you're starting to bounce and it's strong, right? And you take a short, should you expect the stock to fade out all day, right? I mean, intraday, we might be on a good sell point. But on the long-term chart, we could be on the buy. So if you can't recognize a long-term chart as a buy, when you take a short intraday, your anticipation might be to think this is going to go down all day long. But if you didn't recognize the overall trend as a buy, you would hold the short too long and maybe get bounced out. So we'll show you the trade that we made here. All right. So we caught it a little late, but still saw some opportunity. Nonetheless, this hit the scanner. I seen that it was coming down from an overbought scenario. Okay. And we were starting to roll. And simply what we were just trying to do is retrace the market back to its statistical trend, which was the white line. So we go from an oversold, right? So oversold to overbought, right? And we're going to sell the market back down to retrace it back to the smiley face, which is trend or statistical mean slash average. Okay. Once the markets return back to the average, I mean, we're kind of back on a normal trading trend, etc. So our short trade here was a bigger trade, netted about 541. We took a 4,000 share short pretty much as this was curling down and pretty much just covered as we started to tag half standard deviation support and some other levels. So pretty much just straightforward. We held 300 shares. So you can see we had 4,000, covered 2,600, covered 600, covered 500. So covering all into the lows. And only holding about 300 shares that we started to bounce. And once I recognized that this was just not going to give us any more down moves, just seemed too strong to the upside, not enough strength to the downside, we were probably going to hold. I just covered our 300 shares here, and sure enough, we end up going into a bounce. So all in all, pretty decent small trade there as a whole. So those were probably the two most unique trades that we made on the day. So I hope you guys liked the video. I hope you learned something new. As always, I will see you guys on the next video. Everybody, take care.